I think the monetary demand will accelerate on the silver side as gold becomes more and more expensive. So someone, as you said, sell a capital good like a house, certainly can afford gold in most cases. But most working people that see their savings deplete because of inflation will probably run to silver. Plus, it's cheaper, and the gold silver ratio, if you understand what it really means, favors silver at this time. But I want to add on that going back just 2 decades, 2.5 decades, the amount of demand on silver on the industrial side was 35% of the market. Now it is about 60. You could argue even 65% of the market.
The silver market has demonstrated resilience in recent trading sessions, despite an initial pullback. After dipping, it swiftly rebounded and successfully defended the crucial $30 level. It appears poised for further upward momentum, potentially breaking out beyond current levels. Analysts anticipate traders will keenly watch for a move above the $30.75 mark, a threshold that could trigger renewed buying interest. Should this breakout occur, targets include $31.50 and $32 per ounce. Historically, silver's role as a monetary asset shifted significantly in 1873 when it was removed from the monetary standard, leaving gold as the predominant currency anchor. According to David Morgan from the Morgan Reports, this adjustment favored gold in monetary systems until the mid-1960s, when silver coins gradually phased out of circulation in the United States. Today, there's growing optimism surrounding silver, driven partly by its affordability relative to gold. As gold prices climb, silver becomes an attractive alternative for investors seeking to hedge against inflation and protect their wealth. The fluctuating gold-silver ratio, which reflects market perceptions of economic stability and demand for precious metals, further underscores silver's appeal in current market conditions. One particularly noteworthy trend is the surge in silver's industrial demand. Boosted by record usage in sectors like solar panels, silver's industrial demand is projected to reach 711 million ounces this year, with solar panel demand alone expected to increase by 20% to 232 million ounces. Despite a doubling supply of mined and recycled silver since 1990, industrial demand has kept pace, indicating a robust and balanced market. However, if supply growth fails to match ongoing demand trends, there's potential for strain on above-ground stockpiles, heightening the metals market dynamics. Unlike consumable commodities, David sees that silver is predominantly held as a store of value, akin to gold, making it a favored choice for investors and collectors. We will present clips from David Morgan's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
The overall picture, I think, has changed. First of all, from a legal aspect, it changed in 1873 when the powers that be said, silver is no longer money, we're on a gold-only standard. Of course, a few years later, that really changed, and we still had, silver 9% coins up and through 1964, 65, they no longer existed. I think the monetary demand will accelerate on the silver side as gold becomes more and more expensive. So someone, as you said, sell a capital good like a house, certainly can afford gold in most cases. But most working people that see their savings deplete because of inflation will probably run to silver. Plus, it's cheaper, and the gold-silver ratio, if you understand what it really means, favors silver at this time. But I want to add on that going back just 2 decades, 2.5 decades, the amount of demand on silver on the industrial side was 35% of the market. Now it is about 60. You could argue even 65% of the market. Now, those are big numbers. It hasn't doubled in industrial demand, but not, almost. But here's the point. 2.5 decades ago, the total supply of silver was 550 million ounces of mined and recycled silver. Today, it's 1 billion. So that's almost doubled. So think about what I just said. I know your math mind will work. I think the general audience will understand what I'm saying is that the percentage went up from 35 to 60 at the same time that the amount of mined and recycled silver almost doubled, which shows you that if there was no increase in supply for the last 25 years, obviously there has been, but as a thought experiment, if supply and recycling was flat, industrial demand would take over 100% right now. The point is further that the current rate we're going, and I've got to be careful because my predecessor, Jerome Smith, made a big mistake in his last couple books he published about where he thought silver was going, because there was a change in technology that increased production vastly from where it had been previously. But if the current mining efforts and recycling efforts remain relatively where we are with the best data we have, then in theory, we could be in a point in just a few years where industrial demand is taking almost everything out of the silver market, which means on the margin, where are you going to supply silverware, jewelry, and investment demand? The answer is from above ground stockpiles. And that's already taken place from 1990 to 2005. We had 2 billion ounces of silver, we're talking commercial bars, and it got depleted by 1.5 billion ounces 15 years later, a deficit of roughly 100 million ounces every year for 15 consecutive years. And we ended out at 500 million ounces at the end of 2005. And from then until now, the above ground supply has been building up until the last couple of years where we have had these deficits.
Initially composed of Brazil, Russia, India, China, and South Africa, the BRICS grouping is expanding beyond its original confines, signaling a growing global influence. Recent developments suggest a potential transformation into a more extensive and impactful alliance. Thailand and Malaysia have recently expressed interest in joining, while Indonesia is exploring the possibility, and Vietnam is closely observing these developments. Moreover, Chinese President Xi Jinping has voiced support for Kazakhstan's accession, further underscoring the organization's expanding reach. Could a new world political and economic order be built slowly and stealthily? David highlights that emerging markets, particularly the BRICS nations, increasingly garner credibility and influence in global trade dynamics. Strengthening economic ties and facilitating trade using their currencies could bolster their collective position on the global stage. However, alongside these opportunities, significant challenges persist. Issues like weaker rule of law and currency stability concerns, particularly in countries like China, present obstacles to sustained investor confidence. The lack of legal transparency in some BRICS nations has historically made international investors cautious despite these markets' promising economic potential.
BRICS are gaining credibility and obviously more participation. And if they all agree to trade in each other's currency, that gives them strength, it gives them more flexibility. But at the same time, he pointed out what de Tocqueville pointed out, years ago when he came to the United States, and that is the rule of law. And we have that. China really doesn't. So people that were China-centric, let's say at the beginning of the year 2000, early 2000s, and made businesses in China are regretting it today because of that fact. So I think there's always innovation available. Whether the emerging markets are the place it's going to come from, I would say yes and no. I know that's a long answer. I think primarily most innovation still comes from a free market perspective, which the U.S. has lost to a great deal, but there's still a vestige of it here, more so, I think, than most other nations. Not to say that other nations don't come up with some great ideas or inventions or new ways of doing things. On the crypto, I think that's been overblown at this point in time because it's really not of substance in most cases. And because it's really nothing more than a software. And if you get to the reality of what's that there behind there, what's really there, what do you get? It's just like in some of these zombie corporations. I mean, if they cannot get enough cash flow to pay their bills, why would you own that business? Why would you, even think about it? But yet they still are able to generate a loan profile from their banker buddies to exist. Coming back on point, I think it's going to be the precious metals and crypto as probably a second choice. Emerging markets, I think, will flutter in there because the perception will be they're cheap, they're inventive, they're where capital is flowing. So it'll kind of be a follow the leader type of situation on a momentary basis. I still remember the Asian currency crisis. I'm that old. And I remember when everything was, the foreign markets, the Asian markets going east, and that blew up in their face. So I think the best thing to do is to understand how money works, what money is, and to design a portfolio that requires your understanding. If you do that, then you have a precious metals component that basically will see you through no matter what the conditions are. And these questions become somewhat secondary meaning because you have a sound basis for how you structure yourself financially. Yeah, things can come and go up and down, and yet you know that your ship is sailing majestically across the ocean because you have built it in the right way.
Given the current market conditions, the future outlook for silver appears cautiously optimistic. If upcoming economic data confirms expectations of a softening labor market and easing inflation, silver prices could reach $32.52, an 11-year high. This is especially likely if the Federal Reserve hints at a rate cut in September. Will silver prices reach new heights if economic conditions align and the Federal Reserve cuts rates in September? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.